all right, all right. Day 2. How do we feel this morning? Uh-oh, some people are still hungover. Some people had a long night in Miami. We're going to try that again. Day 2, good morning. How do we feel? There we go. Listen, we're going to get some more people in here. We're going to wake some more people up, send some wake-up calls, get the energy going, get the energy flowing. But it is day 2 inside of the Fountain Blue. I'm Kev Knowles. I'll be guiding you throughout today's entire experience. But again, officially welcome to day 2 of the Benzinga Cannabis Capital Conference. If you joined us yesterday, then you already know how impactful this session is going to be. We have a day that is jam-packed, full of investors, full of entrepreneurs, full of speakers who will be giving you the same thing you give to them, which is energy, which is enthusiasm, excitement, and information. And one of those individuals who will lay the groundwork for today is this gentleman right here. Make some noise for Benzinga's own Patrick Lane. Let's hear it for him.
All right, thank you. You guys, give it up for Kevin. You guys don't know this if you weren't here yesterday. Kevin is the in-arena announcer for the Detroit Pistons. So we're headquartered in Detroit, Michigan. We had to bring somebody from home, right? So Kevin's going to bring the energy today. I hope you guys are ready for it, okay? So just a quick couple rules of the road. 11:30, lunch will be served upstairs. Upstairs. So you're going to take the escalator up for lunch today. We've got a whole bunch of seating up there. We do have some celebrities coming today, so feel free to check out the agenda, both our main stage and our studio stage. There's a lot of sessions that you're not going to want to miss, okay? A couple of other things. You have this crazy badge. We were idiots, and we did it this way, so it flips all the time, so I'm sorry. But just go up to your neighbor and flip it for them if it's backwards. It's a great icebreaker, right? Turn their badge around. Maybe if they don't want you to touch them, obviously ask for permission first. So do your thing, go up, break the ice. We love you to sit next to someone you don't know. We're all about networking. If I can be helpful, my name is Patrick, come find me. I'll go and help you find investors if you're raising money. I'll help you find vendors if you're looking for vendors. I'll help you find a grower if you need a grower. Anything that you need, that's what I'm here for, okay? So Patrick Elliott on the studio stage can help you with the exact same thing, okay? So now I get to have some fun and introduce one of my best friends in the industry, somebody who, if you need to know anything about capital, if you need to know anything about debt, if you need to know what's going on in this industry, this is the guy you want to talk to. His name is Scott Greiper. He runs Verde Capital Advisors. Get up here, pal. Everybody give some love to Scott Greiper.
Right.
Get up there, baby. Come on, bear hug? Let's bear hug it out. Come on, enjoy yourself.
That is way too loud, too much energy for me this morning. I'm sorry, but thank you for the intro, Patrick. And right back at Patrick, Elliott, Javi, the whole Benzinga team. I think this is their biggest conference ever in terms of attendance and energy. So round of applause for the Benzinga team for putting this together. It's well-deserved. So my name is Scott Greiper. I'm the president and founder of Verde Capital Advisors. We launched in the late 1800s as the first investment bank M&A practice in cannabis. It was actually June of 2014. So this is our 8th year. I don't know what the equivalent is in cannabis years, but it's been an interesting and wild ride. When we started, there was about 250 million in legal sales in the industry in the US. There was 25 billion last year. When we started, there was about $160 million of equity capital invested in the industry. Last year was about 14 billion. So we've come a long way. So for those of you who are subscribers to the Verde and Cannabis Deal Tracker, we print out every week and have since January of 15, every capital markets transaction that's happened in the cannabis and hemp industry around the world. Every M&A deal, every investment, debt, equity, public, private, by state, by license type. We live in our data. It's one of the reasons companies and investors hire us, because we know how buyers buy, we know how investors invest, we know how lenders lend. So I'm going to go through a few slides, guys. I know I'm breaking the cardinal rule. There's way too much data here, but it is pretty cool stuff. So this shows you the invested capital, debt and equity in the industry from 2017 to 2021 last year. 17, there was $3.5 billion. This is the highlight so far in the industry ever. $14 billion came in 2018. primarily equity. Debt was not really in the industry yet. This was after the midterm elections. If you recall, this was the first major acceleration in public market valuations in 2018. And when public equity goes up, issuers raise money because it's a cheaper cost of capital. Their stocks are trading at record valuations. They're going to go out and monetize that. 19, the market started to crumble, if you remember. Starting in Canada at the end of Q1, the LPs started to report poor first quarter earnings. It's same thing happened down here. And by the end of 19, we were doing almost no investment M&A activity. The market really crumbled. And it went into COVID in 2020. $4 billion raised in 2020, down from $11 billion. We recovered last year. $12.4 billion of invested capital came into the industry in 2021. What changed in 21? About 40% of that number was debt. There was no debt in this industry when we started. Lenders didn't see the asset value, they didn't see the cash flow to come in and have security that their note would be paid and it would be paid at the end of the term. Last year, 40% of this number came in the form of debt capital. And thank God for that, because with equity valuations of public cannabis companies down 70% over the last 10 months, it's become increasingly expensive and dilutive and prohibitive for public companies particularly to issue equity. So they went to the debt markets. And I'll show you the top 10 debt deals last year. The top 3 capital raises last year were debt financings. That's the first time that's happened in the industry. It shows the maturation of a good number of the public companies that have underlying collateral, real estate, cash flow to service debt. And an industry that's as hyper growth as this and needs growth capital with equity down, we got very lucky that debt and providers have come into the market. All right, a lot of stuff on this, guys. I just want to point out a couple of things. These are 12 sectors of the industry. This is the business of cannabis. Guys, and not just for me, but can you please keep it down so that the speakers can hear themselves? Thank you. These are the 12 sectors of the industry. Every business of cannabis falls into one of these 12 sectors. Any state, any country. From ag tech to biotech, consumption devices, vapes, infused products, brands, investment in M&A, this is SPAC. So if you look at this and you look at cultivation and retail, continues to dominate capital raises. It was 61% last year. It was 59% for the first quarter. These are the licensed operators from cultivation to retail that are really standing up infrastructure, right? From the grow to processing, manufacturing, to distribution, to the store. So this is where the majority of the capital has always gone. New states open up, they award licenses, medical becomes rec, and companies that win licenses have to raise money to stand up their infrastructure. That's what they got the license for. So about 60 cents of every invested dollar since we started tracking this in January of 15 has gone to the licensed operator. It makes sense. It's the development of infrastructure. What changed last year? Shit, they told me not to hit that button. Okay. What changed last year? Ag tech comprised 600 million of capital raised last year versus 15 the prior year. What's ag tech? It's lights, it's HVAC, it's nutrients, it's water systems, it's command and control systems. It's everything that goes into an indoor-outdoor greenhouse grow. Why did we see such an increase in the amount of capital coming into ag tech last year, 600 million? Because we have declining flower prices. Growers have to become more efficient. They have to lower their cost of good. They have to lower their cost of production. They have to lower the cost of pricing per pound. That's all the systems that you deploy and invest in the grow. So we're finally seeing the commoditization of flower pricing. Certainly started in California last year. Oregon, Washington have been subject to that for years, even now hitting Massachusetts, Michigan. You know, we are commoditizing this commodity. And the only way the growers are going to survive is if they can compete on price and, of course, quality. But that takes investment in infrastructure. Point out a couple of other things. Biotech pharma. So we're finally seeing the DEA start to issue licenses, right? GW got acquired by Jazz last year for $8 billion. The pharmaceuticalization of this industry is happening in cannabis. What's very interesting, as we saw on the Psychedelics Day a couple of days ago, is that psychedelics has leapfrogged cannabis in terms of drug development, pharmaceuticalization. Nobody expected that. A couple of other things. Investments M&A. $1.1 billion invested in investment M&A last year. You know what that's called? SPACs. There's been $3 billion of SPAC IPOs in the last 2 years in the industry. About half of those trade in the US, and they trade on NASDAQ, and about half of them trade in Canada, both on the NEO Exchange and on the CSE. So they're now publicly traded investment vehicles that are primarily out there to raise money and buy companies. That's what drove that. 3 minutes, 17 seconds, Patrick. 30 seconds? 30 seconds? Holy sh... All right, 30 seconds. Top 10 M&A deals last year. There's Jazz Pharma, acquired GW. But if you look at this, these are the buyers. These are the sellers. We track every deal down to who bought, who sold, what are the terms of the deal. As we saw, this is mainly licensed operators, the MSOs, buying single state private operators. So the consolidation of this industry is still within itself. I'm going to get kicked off here soon. Top 10 debt issuances. Top 3 deals of the year, $750 million, $425 million, $350 million, were debt issuances. First time in the history of the capital markets of cannabis that the largest deals were debt, not equity. Who's raising all the debt? Public companies, particularly the MSOs. Why? They have a lot of real estate to lend against. They have strong, predictable cash flows to lend against. The lenders are confident that they will pay their coupon and pay their debt back. I am finished with my presentation. I do want to announce, and we're going to do this with Benzinga, that Verde is finally launching its first asset management vehicle, which is a senior debt middle market fund called the Chatham Verde Fund. If you come to our booth at P2, you could see all about the fund. Our partner is a former senior exec at GE Capital, who's run for 20 years middle market debt funds, 13% average return over 20 years, 0.2% loss ratio. That's hard to do. So between Chatham's money management skill and Verde's knowledge of the cannabis industry, we're jumping on the debt bandwagon. We're going after the middle market companies. So if you're looking for debt capital or want to learn more about us, please stop by our booth. Patrick, I think I'm done.
Let's hear it for Scott Greiper.